Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God Himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back to the podcast. Today we're going to talk about some things that might be going on in your trading that might indicate it's time to get a coach. So I'm going to talk about some things that I've observed in the past that are pretty common. The first group of people might be people who are having successful trades, but their margins are too small. So if that's you, let's talk about it for a minute. There are about 3 things that could create this problem. The first one is maybe you're not in the right price range for how much money you have in your account. So if you have a smaller amount of funds in the account, then you might need to trade stocks that aren't so pricey. Like instead of a $300 stock, see if you can find some great $5 stocks. Now, if you know how to do options, that is fantastic because then you can trade a $50 stock for $5 per share if you know how to do call options or put options. So that's something we can talk about it in another show, but the point here is that if you're not in the right price range for the amount of money that you have in the account, then you cannot get enough leverage. And by leverage, I mean we want to be able to buy as many shares as we can and still be properly diversified, etc. But all other things equal, as many shares as you can so that when the stock moves up $1, if you got 100 shares, you just made $100. If you've only got 10 shares, you only made $10, right? So, this first point is not really about margins. It's just about flat out the amount of cash you make. And a lot of our students are at a place where they're trying to make enough cash to buy 4 tires because you know as well as I do, we don't ever budget for a tire, right? We just don't think we'll ever need a new tire. But, in stock trading, you've got the potential to make $400 or $500 on a trade. And of course, they used to buy you about 4 tires. Now it'll get you 1 good tire. But anyway, my point is you may have budget goals. You may need a certain amount of cash, but you're not making enough, and maybe because you're trading stocks that are so large, you can only get 10 shares, whereas if you bought a smaller priced stock, you could get 100 shares or even 1,000 if you learn how to do call options. Now, if you're wondering about that call option thing, go out to TRADEway.com and take advantage of the wonderful educational programs, and you'll do step 1 and step 2. Step 2 is all about options. So when you learn how to do options, like I said, just as an academic example, you can buy a $50 stock. You can control the same number of shares for $5 a share instead of 50. And think about the leverage that would get you. And that's what you need is more leverage if you're having this problem. Now, really the next 2 points have more to do with the return being too small. So the next problem that I see is you don't have enough profit in the range. And that's a little harder to do without being able to see a chart. So let me see if I can help you picture a chart. But let's say you have a nice uptrending chart that's doing flag patterns. And if you don't know what those are, go out to TRADEway.com to the educational courses and look at step 1 and step 2. It's going to teach you all these patterns we talk about. But the stair step or the flag pattern is beautiful. It can be an uptrending stock and it makes little flag patterns. And after it makes the flag, it tends to move up, kind of like a flagpole of the next flag. You see, that's how you can kind of picture it. But what you need to look at on that little move up, if you're dealing with, say, a stock less than $100 per share, maybe right around that, maybe $85 to $100 per share, if that stock doesn't make a move up of about at least $3 to $5 in, say, a couple of weeks, then it's not moving enough. It doesn't have enough volatility to make you the kind of return you're wanting to make. So the first thing you look at is what is the average move up that the stock does. And when you're looking at these little stocks from, say, $50 to $200 per share, a $5 move is a great move. So something right around that amount. Now, the third thing is, okay, how much time does it take to make that move? Some stocks, it takes a month for them to move up $5. But a lot of them, it takes about 2 weeks. Those are the ones you're looking for. All right, so to review here about the margins being too small, the first thing is you're not getting enough leverage. So maybe you're buying stocks that are too pricey. And out at TRADEway, almost all of our educational products, when you take advantage of those, you get a thing called the Founders List. There's actually a couple of them. Each have almost 100 of the best growth stocks you can find. One of them has lower price stocks and the other one a little bit higher. And you can find the stocks that you need like that. And you get to pick your own stocks, but you pick them out of those two baskets. That way the fundamentals are really, really good. And they're the right kind of stocks to be trading. So once you choose the stock that's in your right price range for the amount of money that you have in your account, then you're way better off, okay? And then the other thing is make sure it makes a big enough move to be profitable, which a good average is a $5 move. On stocks from, say, 50 to a couple $100 a share. And then the third thing is to make sure that it doesn't take more than about 2 weeks for it to make its move. And then you're in good shape. So here's the last thing to think about here under this topic is a lot of times there are a couple of problems that are very easy to control that are minimizing your margins. One is, what if you get a really bad buy point? In other words, you let the stock move up too much before you get in it. And then the second one is you get fearful and you jump out and you sell it too early before it gets to the proper sell point. Both of those, or either one of those, can really decrease your margins and make your profits too small. But we're going to talk about those in more detail here in a moment. All right, the second group of people, I would say they're fearful and they're just almost ready to quit. They're thinking this: I'm terrible. I'm just terrible at trading. I'm no good at this. I can't win. The market is rigged against me. The market seems to know what I'm thinking and does the opposite. Well, the fact is the market could care less what you're thinking or what I'm thinking, right? It just does what it does. But that's a feeling that's very common among especially new traders. Let's talk about the I'm terrible, or I'm just no good at this, or I just can't win at this, or the market is rigged against me. None of those things are true. Usually the problem is as simple as this: people are just not keeping the rules that we provide with each strategy at TRADEway. So if you don't keep the rules, or if you keep 4 out of 5 of them, but you break one every time, it can make you feel like you're just absolutely terrible at trading, when in reality, a great coach could show you immediately what you're doing and help you stop doing that and start doing it correctly. And that one thing, all of a sudden you'll be thinking, oh, I'm a pretty good trader. I'm pretty good at this. I'm winning at this. I don't think the market's rigged against me. I think it kind of goes with me here. So it can totally change your attitude. So a coach can help you with all the things that we talked about in the first point there, where your margins are too small, because that can be rules you're breaking right there. You're getting bad entries and bad exits. They can help you with that. But they can also help you with any number of other rules that you might be breaking in any particular strategy. And usually it's just one. It's just one thing, and you're consistently getting it incorrectly. And so they can point that out so easily, you won't even believe it, and all of a sudden your whole attitude will change. Now, the other group of people, they really are pretty good at trading and they know it, but all of a sudden they've had 3 or 4 trades go the wrong way, and they've had to take expenses, maybe 3 times in a row, for example. Well, the best thing you can do at that point is get one of the TRADEway coaches to analyze your last 3 to 5 trades. It is so powerful, because here's what they'll do. They'll actually go back in time, and they won't cheat on this. They'll go back in time without looking at what the stock's about to do, and they will paper trade that same play you just did, only they'll do it like they would do it, and they'll make note of that. And they'll provide that to you where you can see how they would have done it, maybe all 3 or all 5 of your trades, what their return would have been on all 5 of them. And they may even say, you know what, I wouldn't have done this one, the first one, or the third one. I wouldn't even have been in that one for this reason. And so I would have lost 0 money and you lost X amount. So it's just really powerful to see what they would have done differently. And in doing that, it teaches you how to do it correctly. So things like not recognizing the patterns. In other words, so many times, as I've done this for clients, I'll say, well, why did you even do this play? What pattern did you see? And they'll go, it was going up. Well, that's not a pattern, or it was so high, I just knew it had to come down, so I bought puts. Well, that's not a pattern. And so there are recognizable patterns that are taught in step 1 and step 2 of the TRADEway educational programs. What about this? You're not drawing your support and resistance lines properly. Well, a coach can see that immediately, and they'll help you with that. They'll help you, and practice is what really helps. If you could, on the weekends, take, 10 minutes, 20, 30 minutes a weekend, and just go out and grab as many of those stocks from the founders list as you can look at, and just click through them and look at the patterns, see which ones you recognize. And as your eye gets to the place where you can see these patterns better and better, then that's not going to be a weakness anymore. So if you're not drawing the lines quite right, now let me encourage you, no two people draw them exactly the same because it's more art than it is science, but you got to get it close. You got to get it in the ballpark and keep the rules for how to draw those lines, and then all of a sudden it can make a big difference. So not drawing the support and resistance lines properly, and not even seeing a real pattern where you just jump in because you think the thing's going to go up, that's not going to work. You've got to learn to get those things correct, and a coach will recognize that immediately and just show you how to correct that. Now, here's one we alluded to a few moments ago, is not getting in at the perfect buy point. Well, what is the perfect buy point? Well, let's first assume that you did draw your support line properly. As soon as that stock hits that support line and bounces up, you want to get in as close to that line as you can while it's showing you that it's actually moving up. That's the perfect buy point. If you let it go a couple of days and it moves up a couple of more dollars, you're already past the perfect buy point. You don't want to be a third of the way up the range or halfway up the range when you get in these stocks. That will not work for you. It'll make you think you're a terrible trader when all it is you broke this one rule. And so what you do when the stock is already 2 days past the perfect buy point is you skip it. You don't do that play. You go find another stock that's at the perfect buy point, or you keep watching your perfect stock till it rolls back down, hits the support line again, and then bounces up, and then get in it. So you might have to wait 4 weeks on that stock, or go find another stock. So, that's just discipline. You have to have good discipline to avoid bad buy points, but you got to get to the place where you have that discipline, or you won't be a good stock trader. But don't think you're a terrible stock trader just because that's the one thing you've been doing wrong, because it's so easy to correct. So if you could jump back and look at your trading over a 3-year period, the problem with this mistake is that it just multiplies. If you're doing a lot of trades where you're getting in too late, instead of following this concept of winning big and losing small that we teach at TRADEway, you're sort of winning small and losing the same amount, and at best you can break even, right? So in order to win big, you've got to get a perfect buy point, and then you got to make sure you don't get so fearful that you jump out early. We'll talk about that one in a minute, but that perfect buy point is so key, and it's not hard to do. It just takes discipline. Another thing it affects is if you don't get a perfect buy point, your stop outs are going to be huge. And we'll talk about that in a minute too, but that can really hurt your return. So I would say the next thing that I see a lot is people don't know when to sell. I mean, maybe they're great at buy points, but they don't know how to know when to get out of the stock. Either fear causes them to jump out early, or their pride makes them stay in it too long. I'll just make another $5 before I get out, that sort of thinking. So you really should know your exit before you enter the trade, right? So how do you do that? You got to be really good at those support and resistance lines. And I like to draw, another line just ooch it down a little from that resistance line and call that my trading line. And when that stock hits it, I will sell, or I will put a trailing stop loss. Both are allowed. You won't be breaking any rules if you do those two things. But you need to have a point where you know where to sell. Now, here's the other thing you have to do. You have to have enough discipline to control your fear, and don't watch the 1-minute chart every day while you're in that stock, because it'll scare you out. That 1 minute chart will scare you out of a good trade. Really, it's more important just to kind of watch the news, the world news, and Watch your market alerts because that's us helping you with the market tone. And as long as the world news and the market tone is kind of right for an up play, just stay in it because it's going to pull back certainly many times during a day on that minute chart. It'll pull back. And even on a regular chart, it's going to have some days when it may move down 50 cents on the day. That doesn't mean you should have gotten out. So I like to have a rule for that because anytime my emotions get involved, I mess up. So rules take the emotions out. So here's what you want to do. When you get in a play, you want to think this way, okay, there's only two places I'm getting out, no matter what my emotions say to me. One is if it hits my stop out point, which is anywhere from 8 to 10% below where you got in. At least that's the beginner's way to do it. There's a more advanced way that you learn in step 2 that's better, but we're not going to talk about that here. So you need to know where your stop out is, and if it hits that, then get out, okay? The second one is when it hits that trading line that's ooched down from your resistance line. If it hits it, sell it. If it doesn't do one of those two things, you stay in it. Now, the only exception to the rule is if there's a major world event or economic event that will cause the play simply not to work, and you know that it's real news, it's not fake news, then you can get out early. But that's the only time, and you got to be careful with that one. Don't use it to rationalize getting out early. Make sure it's real. It's a real event in the news that's going to make your play not work. At that point, sell it, take what little profit you can. So the main rule is you only get out if it hits your stop out point or your sell point, which you have predetermined before you got in the trade. See how that can effectively control your emotions like fear and pride. So that's a great thing to know. And the coach is going to nail that. They're going to see that in you immediately when they look at maybe 3 or 4 of your most recent trades. They're going to see these things and discuss them with you and remind you of these things. There are about 3 more things that I have noticed in people, and our coaches will notice these things immediately if you have a problem with one of these. The next one is not paying attention or understanding market tone. Now, that is the most difficult thing to learn. I think it takes 3 to 5 years because you have to trade through bull markets and bear markets, and you got to be reading the world news to see what news is fake news, what news actually affects the trades. Well, that takes a lot of time. So that's why we help you with this with the market alerts, is we do that for you, but you need to be reading them. You need to read those every morning. And you don't need to be in an up play or getting into an up play if it's a real dark, gloomy day in the market, like the futures are negative 500 on the Dow or something. So you need to pay attention to that. There are 3 legs on the trading table. Remember that. One is fundamentals. Is it a good company with great products and great leadership, et cetera? Are their earnings growing double digits quarter to quarter? These define growth stocks. That's the kind we're supposed to be trading with. And so if we're not looking at the fundamentals, that's a problem. If we're not looking at the market tone, like we want the whole market to be kind of happy or at least neutral if we're going to be doing an up play on any particular day. And so that's a problem coaches will see, is they can actually go back and look at the market alerts that you should have read the day you did your play. I mean, I do this all the time with students, and it's saying, go to cash, it's bad today. And here this student just bought a bunch of call options and they lost money on it. So it may seem small, but it's important to look at the market tone. So another problem I see is not trading the right kind of stocks. A lot of people will get these email alerts that they'll buy from other people where they're giving them lists of stocks. And you know what? Almost all the time they're the wrong kind. They're going to show you what we call value stocks, and you need to be trading with growth stocks. So I would stop taking advice from anybody in the world. You need to take those founders lists. There's a couple of them that we'll provide. They're the best growth stocks in the world that we can find. And then there's about 100 in each list, and you get to pick your stock from those lists. And that way, the fundamentals have already been done for you. They are the right kind of stock. They're growth stocks. And so, if you're not trading the right kind of stock, maybe you're just trading something because you like the company. Maybe you trade American Airlines because you fly American. That's not a good reason to be trading. And a lot of people I've seen, they'll trade a stock that's the company they work for. That's not a good reason. And so I would take these 2 lists that we provide, go through them, and be looking at the charts and pick the ones with the prettiest charts. And now you've got the growth stocks going for you. And then the last one is that, we've mentioned already, it's kind of emotions, problems with emotions. And we all have them. You cannot eliminate them, but you can control them by using the rules. One is fear. That'll cause you to jump out of your stock too soon, time and time again. The other is greed, and that will cause you to stay in it past where you said you would sell it. And the other one is pride. And pride will work together with fear and cause you to jump out too early because you want to be able to tell your spouse or some other person in your life, I don't ever lose on these things. Well, if you jump out quickly, you won't lose. You'll make 25 cents per share, but you made money. And so that's pride. See, you want to take a chance. You want to let it go all the way to your sell point, which is just shy of your resistance line, even when it feels frightening several days during that 2-week period, right? So those are things that I see that coaches can really help you with a lot after you've had 3 or 4 trades go the wrong way. Now, it's true that sometimes you just need to take a rest. Just go to cash, take a rest because you've gotten out of sync with the market for whatever reason. And a coach can even let you know when you might ought to do that. And when you're doing that, take time to review your educational material from TRADEway. Take time to do more paper trading and recognizing stock patterns and so forth. And then jump in maybe a week or 2 later. And that way, maybe you sync back up with the market. And lastly, to sort of sum everything up, coaches at TRADEway can help you identify what rules you are breaking, and this will give you confidence and encouragement because it might be one thing you need to fix. Just one little thing can make a huge difference. And all of a sudden, when your confidence builds, you become a better trader because you start believing in your educated guess. And that's really what this is all about, right? It's about a hypothesis about which direction the stock's going to go based on what it's done in the past, based on the math and the probability math, and that's what we're teaching you to do. But it really helps if you can build some confidence. Well, a coach can help you do that because they're going to identify the confidence breakers, the 1 or 2 little things you're doing wrong that broke your confidence. They're going to help you fix it immediately. A couple of things that you can take advantage of. There's a thing called a live trading hour. Wouldn't it be great if you could hop on one of those things and show them the ticker symbol that you're thinking about trading the next day and tell them what kind of trade you're going to do and let them tell you whether they would be doing the trade or not, or whether they think it's a good trade, or if not, why? Man, that's fantastic. Now, imagine if you're a new trader, don't you think it'd be nice to have someone holding your hand when you do your very first trade and your second trade and your third trade? And that's exactly what the coaches will do with you. They can either do it individually or they can do it on the live trading hour or things like that, where you have people with you holding your hand when you do these first few trades. And then the other thing is trade analysis. And this is just review because I've already mentioned it, but what you want to do when you get a string of trades that didn't go right, maybe 3 in a row, get with a coach and give them your last 3 to 5 trades and let them analyze those trades for you. It will do a world of difference. You won't even believe it. So please take advantage of that. And I want to give you this thought too. When you're first starting out, sometimes this can seem overwhelming. I mean, there are a lot of strategies that we teach at TRADEway. You don't have to learn them all at once. You learn them sort of line by line. But here's the great advantage of a coach. They can help you with this. They can kind of help you know what strategies fit your style, your risk tolerance, your personality. They can help you know if you're syncing the strategy to the correct place in the life cycle of a market, for example. Some of these little things that are really hard to do when you're brand new, they're hard to know about. The coach can help you with that. And the cool thing about it is as they're helping you with it, you're learning how to do that yourself. So they can hold your hand, especially when you're new. And when I say new, I'm talking about your first 3 years, basically. So that they can help you build the confidence that you need. Because, there is a lot of information. You don't have to master it all at once. They can even help you know, well, what things do I need to master to start doing a few trades? And then they can help you know, okay, what if I want to go a little more advanced and maybe get into some of the options trades and the straddles and the spreads and things like that. They'll help you know when you're ready to do that. You cannot do it all at once, but you don't need to. So you'll leave step 1 with the potential to do some trades to make money with just those skills. And so the coach will help you, take you where you are, show you how to master that, and then go learn the next new thing and master that. And then when you have 4 or 5 strategies that you're really good at, you can pretty well trade through just about any kind of market. That's where we want to get you to be, so you have that boldness and confidence that you need. Well, those are the signs that I think of the most that tell you it's time for you to talk to a TRADEway trading coach. And I hope you'll take advantage of it. I hope you enjoyed this show, and if you did, I hope you'll rate and review it so people that think like we do can find it. It'll be a benefit to them, and I hope you have a great day.